Hey guys, thanks for clicking on my market report. This is Mike, and this is a report on basically the markets, especially the mortgage rates, mortgage-backed securities, which translates to mortgage rates. But we do touch on some of the stocks. Without further ado, let's start off the report with the economic reports. We got first on the item here for housing starts month over month. So the previous one for the month of December was at 1.669 million. However, that was revised even higher to 1.68 million. These are annualized units coming into it. Forecast was supposed to have a slight pullback down to 1.658, and it had a much further pullback to 1.58 million. Now, the future housing starts is building permits. Now, the previous one back in December was at 1.704. Forecasts were calling for 1.678, so a little bit of pullback in the permits. However, it rose to 1.881. So we had a little bit of a pullback on housing starts. However, we got for future building permits, those increased. So we might be a little bit more on pace later in the year. Now, we also go to manufacturing in the Philadelphia region, which is the Philly Fed Index. The previous index in January was at 26.5. However, forecast was calling for a pullback of 20. However, it did pull back, but not quite as bad at 23.1. Still a decent number, but it's disappointing to see anything pull back or anything contracting a little bit. Jobless claims. Last week's number report was revised higher, 793,000 going to 848,000. Forecast for this week's report came in at 765,000, and it came in much higher, almost 100,000 more at 861,000. So obviously this is not great because we're kind of seeing it going backwards a little bit here in the people applying for first-time unemployment benefits. And if you look at continued claims, which we don't always touch on, this is still within range here. It did shrink a little bit, which is obviously good news. But again, jobless claims did go up a bit. Let's go ahead and take a look at the headline news. Stocks are down again. They are looking at yields, as we kind of touched on yesterday. Yields have kind of spiked. It was touching at 1.3 yesterday. And today is kind of pushing it, as you'll see coming up pretty soon. Again, that same range here. Now, what does that mean? That means they're reevaluating their stocks or values, because what does that mean? The values or the costs for businesses and consumers have gone up. The 10-year yields, with that increasing, that means borrowing costs have also increased. That's also creating more inflation on the consumer level as well. And basically now they have to see if they're going to be able to sustain that where they're at. So again, stocks are kind of reevaluating their positions right now, and they're kind of running out of reasons for the continued optimism. We're getting vaccination rollouts, we're getting the COVID cases coming down. We got different things of that nature, stimulus package. But again, those have been really kind of boosting the markets up. But now it's already priced in. What more reasons do they have to keep going upwards? Let's go ahead and take a look, see what mortgage rates are doing today. Mortgage rates we've lost some of that gains we had. We closed upwards, as you saw here. About, I think it was like 16 basis points we went up, so not a lot, but it helped out a little bit. But we were down much further, as you can see. When lenders came out with their pricing, most likely we were down here. We were down at least 13 basis points at one point. And basically what that means is that lenders came in a little bit more conservative, a little bit more, probably a little bit worse pricing than where we left off yesterday, kind of losing the gains that we had thought we had gained yesterday, kind of losing that. So right now we're down about 6 basis points. But if things change and maybe improve, maybe we might get a price for the better. But right now they're going to be kind of we pretty much kind of lost those gains that we had yesterday as a result. Yields again, we're just under 1.29 at 1.289. We're still kind of in that range. We were up a little bit higher in the 1.3 range. We're looking at 1.33 as the next catalyst here. We got to kind of watch this trend here, see if it's going to break above that, if it's going to continue going here. All right, so that's pretty much the wrap for the day. Mortgage rates a little bit worse than what we had yesterday, kind of more in line with what we saw on Tuesday, the close of Tuesday on that. So Again, if you guys got any questions about mortgage rates or about anything about mortgage related, please feel free to reach out. A little bit about myself: I am a loan officer, and I do work with a lender that is national, and we can certainly talk a little bit about, or I'd be more than happy to talk to you a little bit about your refinances or purchases if you guys are looking to get pre-approved to buy a property. Again, we do loans in all 50 states. I'd be more than happy to discuss that or review it with you guys if you guys are looking for a second opinion or just looking to get started. You guys have a great rest of your day. Thanks so much for watching, and I'll see you in tomorrow's video. Bye-bye.